Hey, it's Ian Ardill here. Welcome to Coffee with Ardill. It's certainly a great time to have a cup of coffee and sit back and learn a little bit more about investments. Today, I'm joined together with somebody who I've known for a number of years now, who I met back in 2019, Danny Freedman. Danny, thanks so much for joining us today.
Thanks for having me in.
Uh, Danny, it's an absolute pleasure to have you. You're joining us from all the way in the Sunshine Coast in BC, correct?
Yep, you bet. Gibson's BC.
So, did you just get off your paddle board to get on the
Yeah.
call?
Well, it's a little early in the day still, but with the weather the way it is this fall, I might just get out there.
Amazing.
Yeah.
Amazing. Well, before we dive into our conversation with Danny, I'll just do a brief overview of the team. Our team is here and we're always ready to help. Certainly, if you're joining us, listening to this recording after the fact, or you're joining us live, I want to introduce you to the amazing people here at Ardill Group that where we truly make it our mission to walk with you throughout your financial life. I'm going to turn it over to the amazing team just to give us a brief intro.
Hi, I'm Alejandra Ramos Zambrano, and I'm a licensed advisor here at Ardill Group. I've been here in Shire for 4 years, and I'm passionate about helping our clients build wealth and long-term financial security. So you can reach out if you have any questions or comments, and I hope you enjoyed today's webinar with MakeSpace.
Thanks, Ali.
Good morning. I'm Darlene. I'm the Director of Internal Underwriting here at Ardill Group. I've been with the team for over 17 years now, and I'm really proud to support both our clients and our team, making sure everything runs smoothly and, most importantly, compliant. And I'm very grateful to be here today. And thanking everyone for joining us today.
Hello, everyone. I have someone with me as Mr. John Ardill. I don't know if you want to introduce yourself first.
Well, I just want to say hello to everybody. And Danny, it's nice to see you. I know we've spoken on the phone, but I haven't actually seen you in the directly. Anyways, I just want to welcome everybody. And I got to tell you how special it is to be down here with everyone at the office. There's so much great energy here. It's so positive. So thanks for letting me hang out.
I'm also super excited to be here. I'm Anna, and I'm your customer support manager. I'm your first point of contact, so feel free to reach out at any time. I'm here to assist you and looking forward to this discussion. Danny and Ian.
Awesome. Thanks, guys. As you can see, I'm surrounded by great people, and truly, we've got amazing clients such as yourself, and so we're grateful to work with you. But without further ado, let's dive into our conversation with Danny. Danny, I know you've prepared a bit of a slide deck for us, but before we kind of dive into that, just tell me a little bit about yourself. Tell me a little bit about your family, and again, I alluded to where home is, so I didn't mean to steal your thunder, but tell me a little bit about where home is and a little bit about yourself.
Well, I feel remiss if I didn't start with I was born and raised in Edmonton. I spent my first 36 years there. So it's with a great amount of pride that I announced the McDavid signing for 12 and a half times 2 years to start the presentation, which to all Edmontonians is a very exciting deal. And that speaks a little bit about me. I've got, a nice, lovely family, wife and three kids, two of them in university now out east around you guys, and one still at home. We live on the beautiful Sunshine Coast. We moved here about 15 years ago, and just love it here. Lots of serendipity. It's one of the most beautiful places in the world. I remember a trip about 10 years ago when we went to Kauai in Hawaii, which is like just such a gorgeous place. And it was the middle of winter, and flying back and coming to the coast, I was like, Kauai is nice. And this is also really nice. Like, it's just as beautiful. Like, it's unbelievable. So I feel very blessed to have to live here, have a wonderful, healthy family, and be an Oilers fan.
Well, thanks, Danny. Wondering, can you tell me a little bit about you find yourself in the storage business? but that wasn't always the case.
Yeah.
I mean, you've always been sort of connected, but I'm wondering if you can just give us a little bit of context about your background and how you ended up operating a storage fund.
Well, speaking about serendipity moving to the coast, we ended up buying a house next to what is now my partner, Vaughn Koyman, in self-storage. When I first moved to the coast, I was looking for work and found work at so my first career was in foreign exchange, and spent 10 years building a foreign exchange, helping to build a foreign exchange business from 3 people to 150 people internationally. Quite a successful business. And after I left, I was sort of looking for what to do and ended up moving to the Sunshine Coast with my family. Actually, really quite spur of the moment, interesting time in life. Bought a house next to Vaughn, but didn't really know Vaughn. And then one day, he was running at the time a portable container, like a shipping container sales company, and he owned one self-storage on the Sunshine Coast, which we still own. But he was really looking to build his shipping container business, and I was looking for a salesperson. His accounts payable lady came into where I was working at Mark's Work Warehouse as the manager, and she did a return. And after doing the return, she went back to their meeting and she said, that manager at Mark's, he's got the energy I think we need to really build this business. And Vaughn said in the meeting, he's like, I think that's my neighbor. And so he calls me, he apologizes for not, like, I've never met him before, after 3 months of living next to him. But it turns out we have a great relationship. We built Canada's largest wholesaler of shipping containers over the course of 5 years. Found that it was too hard of a business because there was a lot of spinning parts, but not enough value creation at the end of the day in the sales company. And, I guess it's a bit of a longer story, but just to end it quickly, we went to a convention thinking, okay, well, everybody loves containers. Like, you talk to them, people talk about what they're building and all this sort of things. There's like interest in them, but who's making money doing it? And went to a convention and like right away we saw it. It was the rental guys. Everybody renting containers was making money. And so we started renting more, and like we turned from rentals of containers to self-storage, like right away within like 3 months. We bought our second storage in Winnipeg. A year later, I guess a year and a half later, we ran into you guys at Raintree and had a large client who asked us to build across the country. You guys said, well, you should start a fund and get people to join you and build storages across the country. So we did. We took our equity from our 2 storages, put them into the fund. We asked people to join us. And that fund, over the course of 5 years, raised $45 million. And we ended up, 5 years later with about 20 storages. And, really grew what we want, and then realized that, most of our investors wanted to stay in self-storage. They didn't want us to exit where we were. So we turned it into an evergreen fund. And that's what we've been doing ever since. We raise money on a perpetual basis. We strike a NAV every month. And now we're at 32 self-storages and growing. Our goal is to get to, I think in the next, it kind of accelerates. It builds on itself with the right operations. And I think we'll hit 100 storages in the next, 3 to 4 years. All the while returning, creating a lot of value for our clients and in the storages that we run. And value for our investors.
So we're gonna, obviously we've got a deck, and we're gonna dive into the
Yep.
mechanics of forum make space. Apologies, but I'm wondering, just before we dive into the deck, I think you and I have had a conversation kind of off the record, and I'm wondering if we can put it on the record.
Sure.
About storage in Canada, and I'm wondering, like, kind of when we think about self-storage in general. Well, what do you see as both the opportunities and kind of why is this an interesting area to be in as an investor?
Yeah, I mean, if you like really solid returns on a regular sort of non-volatile basis, it's a great industry to be in. And that's what self-storage delivers. It's not like you're not getting on the next technology and getting a 10 bagger through storage. Like anybody who's looking for that, it's just not happening. But what you can do is just run a storage well, continue to take some income from it, and create value over time by just growing the revenue and EBITDA of the operations. And it's steady. Like we have literally, I think we're at 15,000 customers across.
Yeah. So Danny, I'm just kind of thinking about your, like, in general,
Yeah.
like, how many, maybe you know this or don't know this off
Yeah.
the top of your head, so I'm going to throw you on the spot here.
Yeah.
But how many self-storages would there be approximately across the country?
Well, 3,500.
Okay.
And to
And of
compare
that,
it to the US, it's about 50,000 in the US. So it's,
okay, so of the 3,500 that's in
yeah.
Canada,
Yeah.
how many of them would be what I'd call professionalized, and how many of them would be kind of mom and pop operations?
You probably have about 20% that are like in professional organizations.
Okay.
And then the rest is mom and pop. And by mom and pop, that's like, I mean, it's an interesting term, but there's lots of different types of mom and pops. Some mom and pops own like 4 self-storages, go to every convention, integrate every new technology. They're not really operated like a mom and pop, even though they are, but they're more localized, which is why we call them mom and pop. And some people had like a garage, had some land out back, started parking cars, and then built a building, and then over time built something that had great value and income for them. So those, but and those are more of the type of storages we buy. They like, go to Florida for 6 months of the year, and they're happy to just have the cash stream coming in. So of those, I would say there's probably about maybe 700, 750 that would fit
Right.
sort of our business. Yeah.
Right. And so essentially the opportunity here is buying self-storage facilities that are kind of not poorly managed, but they're underutilized,
Mhm.
where you can layer in the container rental business, you can layer in additional opportunities. And
Totally.
that's exactly what you guys have been doing. Fair?
100%. Rinse and repeat. Exactly.
So let's dive in. So if you want to share your deck
Yeah.
with us,
Yeah. You bet.
I think it would be of huge value. And I won't steal any more thunder.
Here we go. Sorry about that. Can you see that okay?
It's up now. And
Great.
maybe just the one thing, your full name is Forum Makespace.
Yeah,
You have a strategic partner
for sure.
with a Forum. Can you explain that just so that, like, I think it adds actually an incredible credibility and bench strength in the terms of that relationship. Is that a
Yeah,
fair statement?
definitely. I would say when we first started with Raintree, as you might remember, there was about a year of due diligence on MakeSpace before Raintree would accept us their shelf, and you guys would offer, our issue as an opportunity for investment. And Forum went through the same process. So in about at the end of 2023, beginning of 2024, Forum we created a joint venture with Forum. We're the storage operators. We had 32 assets at the time, maybe 35 assets at the time, and they're a professionally run investment firm, and they were in the student housing business. So they're very much wealth management, and we felt like we had a great opportunity to continue to expand our storage operations. Like our reach into Canada has lots of benefits, including like branding benefits and operations benefits, and they had deep reach into the cereal market, where they are already on a bunch of different shelves. So we felt like we could get quicker to the shelves, and family offices and institutional capital, and that's what they bring to the table, as well as some real professional reporting to investors. And the combination of those two things, like any new company getting together, it takes a little bit of time to understand like how you work together and what happens. But we're in a real synergistic form right now. We just raised $54 million last summer to get more storage as we continue to expand our operations. They're really hitting their stride in terms of marketing our business, and we've taken their lessons around reporting. And I think the feedback is, and you can tell me if I'm wrong, but the feedback I'm getting is our reporting is exceptional, and it just gives a lot of comfort to investors that they know exactly what they're investing in and have a great feel for what we're doing now and also what we're going to do in the future.
Awesome. Thanks, Danny. Let's
Yeah.
I'll stop asking questions. Go
Okay.
for it.
Okay, so Forum Makespace, as you said, this is we call this the Massive Fund, MSSF, and this is our main storage fund, which is a stabilized storage fund. I'll tell you a little bit about the Forum Makespace team. Like I said, my partner Vaughn, when I first joined him, built his first storage in 2004. Pender Harbor, we still own it and operating it now, and it's still growing in value as we continue to add NOI to that storage, which speaks to the longevity of what we can do. But we really didn't start this process of growing as a storage fund until 2018. And since 2018, we've been able to grow to 57 storage assets now. The Forum MakeSpace AUM is $3.1 billion. About 500 million of that is in self-storage. We have actually 5 storage funds now. A few of them are closed-ended. There's a development fund. This is a stabilized open market, regularly set NAV storage fund, and it's by far got the biggest breadth across the country, and 32 assets everywhere from Vancouver Island to Quebec. Forum likes to measure themselves in terms of lives positively impacted, which they put themselves at 25,000. We have over 130 investment and asset management in self-storage alone. We have 70 people who work for Forum MakeSpace, the joint venture. So, there's every good investment's got a thesis. Why is it a good investment? And there's a couple tailwinds that have been just really strong for Canada, aren't going anywhere. It seems like, in fact, it feels like those tailwinds have already happened, and even to unwind them would take a long time. We just had a massive growth to our population in Canada, and with the cost of construction going up the way it did, it's very difficult to build new self-storages at the same price that you used to and at the same speed that you used to. And so, sort of double win there. The cost to build a self-storage went up 30 to 100%. So the supply isn't as big or growing with demand. The population grew, but also because building costs went up, people are just building smaller dwellings. Like in Canada this year, housing starts, about 60 to 70% of housing starts are multi-unit now. So we're not building the same amount of sort of single family construction that would, have an extra bedroom or a basement or a garage or the things that people typically used to use to store things. So now you're building, a duplex or a condo and mostly rentals. So it leads more towards self-storage. And just a general trend for Canada, because supply isn't expanding that much and demand is increasing, we continue to see this difference between Canadian self-storage supply demand metric and the US. In Canada, there's about 3 square feet per person of self-storage in Canada, and there's about 6.5 square feet per person in the US. And so that just shows you that there's still like could be a big expansion to the market.
Awesome.
If anything comes up, Ian, please jump in. Like you can, I'm happy to.
You're doing great.
Yeah. So one of the one of the other things we love about self-storage, even though this is a bit of a depressing slide, the demands are not cyclical. Like the main demands of self-storage don't rotate with the economy. They're life events. Like we've seen, you see displacement, downsizing, death, divorce, disaster. If birth started with a D, it would probably be on here too. But these are like real life events that create demand for self-storage. A good example is when someone does pass away, often people are trying to understand their estate, what's going on with it. They take a bunch of stuff, they throw it in storage. We might want to split this up later, or we might want to sell this later, or we'll go through it later as we run through the actual estate sale of the home. And then it's sticky. Like that stuff sits in storage for 2-3 years. Same thing with disaster. Someone has flooding in their basement. All of a sudden, you need to take everything out of the house. It's a rush job. You need to bring it to a self-storage. So these are just, they're sort of life events. They don't change with the cycle, and that actually is storage. I think it's the next slide. But yeah, so storage has shown just a very light standard of deviation for its total return over the last 30 years. It continues the ups and downs of storage are just a very low wave. They're not deep waves up and down. And we've seen, during that time, we've seen recession. We've seen the housing bubble in 2008, or the tech bubble in 2008. We've seen the pandemic. In each of these cases, we've seen different demands show up. So not only are there like life events, but like as an example, during the pandemic, if you remember at the beginning of the pandemic, all the students had to go home.
So
And
I want to
yeah,
make sure we just understand this
yeah,
graph, and
yeah,
I
yeah,
think
you
it's a
bet.
really cool graph. Essentially, the deviation side is really kind of in the theory, you want the lowest deviation and the highest return in
Exactly.
theory,
Yeah,
right?
yeah,
And so, if you have a high degree of deviation, it means that's like the risk that you took to get to that result, if you want to think on
exactly.
that.
Yeah,
Right. So we want a low deviation, which, self-storage is not maybe the lowest, but it's certainly on the lower end of the spectrum. And then in terms of the average return, when you average it over an extended period of time, isn't it interesting? Yeah, you've certainly seen some really strong lift there. You don't think of self-storage as a hyper attractive asset class in real estate. But it's certainly, when you crunch the numbers, that's certainly what you see from a long-term perspective. Fair?
yeah, yeah. That definitely, and then that's what if you've been in the fund for 5, 6 years now, that's what you've seen in the fund over time too, sort of overperform. Um, yeah, I mean it's a high demand asset where people really use it. It has real function in life, and it doesn't deviate a lot according to economic cycle.
Thanks, Danny.
Yeah, for sure. So our thesis on top of that is that and this is very specific to our business. We don't really we're not doing development in this fund, so there's no lag on capital over time, and as well we're looking for undersupplied markets. So we're not building grade A, what I call Taj Mahal storages in downtown Toronto, Montreal, Vancouver, Calgary. We look for the assets that are already cash flowing, and they're in the B and C centers that have good demand for the storage, but have much more attractive valuations, better cash yield, and we can really execute on our value add strategy, which is what you were sort of talking about before. Like, how do we professionalize the operations, whether that's through technology that the local mom and pops typically won't use in order to drive sort of value into the storage, but also like, can we bring in other aspects of business? Like, can we increase the amount of sales of boxes? Can we bring in a couple of our storages have a peer litter that they do business with or people come to do business in the storage. U-Haul trucks that get located at our storage. Can we add portable containers? Is there extra space for parking or on-site containers? These are all things that we professionalize the operations of and just build in my mind, an incredible amount of value to the storages over time. There's also, like, in a lot of these markets, we are the professional competition, and the rest of the competition is either isn't there, or again, they're not as not as attentive to results. And I use the example of somebody who wants to go to Florida for 4 to 6 months, which is a real sort of thing that people like. They like to get into the storage business so that they get that flexibility in their life. They don't have the demands on the business. Well, they don't want to increase rates because they don't want to see an empty locker. Because if they have an empty locker, they have to fill the locker. And that trend allows us to buy well. I can tell you, I've been in this market for buying storages for about I guess 7 or 8 years now. I haven't met a single person who doesn't want the best dollar for their business. Everybody wants the best dollar for their business, but how they're operating the business and is how they view their business. And there's times where we can walk in and we can see that we can operate it better. We can put our magic on it. They understand that they can't do that, and we offer them a really fair price that they're happy with, and we're able to add value for our investors. And
Awesome.
like we talk about that, the call it 3,500 storages in Canada, maybe 20% is owned by folks like us or US REITs or a REIT in Canada or whatever, but a lot of it is locally owned still. And so we're not boiling the ocean, Ian. Um, we're not looking to buy 100 storages this year and have like $2 billion in our pocket that's burning. We spend money as we get it, and we can, out of these sort of 750 storages that we think can fit our mold, we'll buy like 6 or 7 this year, and that'll incrementally increase the value of the fund, generate returns for our investors.
Thanks, Danny.
Yeah. So a little bit about us for MakeSpace and this fund. It's a Canadian self-storage platform. Canadian owned. I think 99.8% of our investors are Canadian. All the storages are in Canada. The ownership of the fund is in Canada. Our revenues and expenses are Canadian. Maybe like 2% of our expenses might be in US in technology service providers. So proud of that. We do supply markets with storage nationwide. We go as far as Quebec, and we have a few on the island in Vancouver Island. We have 32 properties in the fund. We target a 10 to 15% annual return, and we have a 4.5 cent yield in the Series B, which is what you're dealing with. Over 220 million in assets under management in those 32 properties. And again, our strategy is to add value to enhance the benefit of our clients, our local storage clients, and to the benefit of our investors. And our
Danny, wondering if you can jump to, you're hitting on a couple of key points. Can you go to you have a slide there that talks about your historical returns?
Yep.
There we go. Perfect. And you're tapping into this, and then we'll kind of jump back there
Yeah,
in
sure.
a minute. But I'm just, you're talking a lot about that return history, and I want to kind of make sure that we capture this. That you really built the fund around kind of when you stress test it and you look at it, you're kind of targeting that overall return, inclusive of the monthly distribution, a 10 to 15% overall
Yeah.
yield. Fair?
Yeah.
And I, that number on the bottom there, that represents pre-merger.
Correct.
So if somebody got into the fund in 2019 and exited, with that rollover, that would have been their return on that fund if they held those units for that season.
Right.
Fair?
Yeah. Yeah.
Okay. So and so when we look at what the fund has done since then, we're looking at like since inception of that rollover, we're looking at loosely 10%.
Yeah, I think we'll probably end up closer to like when you look at by the end of the year, because I have some visibility on a lot of our fund results are driven by appraisals, like value gain in the properties based on the actual performance of the property.
Yeah.
And I think we'll probably end up at about 11 and a quarter, over a 2-year period. So something like that. And I'll speak to you a little bit about the difference actually between the closed end fund and the open.
Yeah, but I want to highlight that for a moment is, the last 2 years, and certainly this last year, real estate in general isn't exactly exploding in value, generally speaking.
Yeah.
And again, I want to preface this that, past returns are never a guarantee of future returns and yada, yada, yada. But I want to kind of just really kind of hone in on this. It's not that real estate has been exploding. And I think one of the major drivers for any self-storage fund is when there's a large demand on moving. So if people are moving from different houses, and so the real estate residential side is kind of quite active, it has a positive roll down effect to self-storage facilities. Is that a fair statement?
Yeah, so as much as a lot of the demands are not cyclical, that is one that we've seen in the last couple of years that just forget about whether prices go up or down on real estate transactions, because we're sort of agnostic around that. It's the volume of trades that will be one of the demands of self-storage. And yeah, Canada's had a much lower house trading than it has since, for the last couple of years, which has been a drop in the demand for storage for sure. Yeah.
Here's my point.
Yeah.
Is that the last 2 years, I would say in the world of self-storage, it hasn't been like, wow, this is incredible tailwind markets for self-storage. Yet at the same time,
Oh, you went
reasonable yields on target in the fund.
yeah.
So what I'm pairing that with is if you, it's not a matter of if real estate markets come back, but it's a matter of when they come back next year, 5 years from now, 10 years from now. I mean, I'm not trying to push the envelope here.
Yeah.
I'm just saying that, there's a very reasonable business case here to see a stronger return that's, on the higher end of that target yield of 10 to 15%. Is that a fair statement?
Totally agree. And actually there's a few different factors that will lead to that. One is the rebound of the housing market. Like you're I would have sort of explained it the same way, that very happy to achieve 11% returns in a market that's actually been a tough market for self-storage. It speaks to the operations team and their focus on knowing the customer and be able to deliver well on marketing and returns and managing the storages and expenses well. So that's all good. And then on the other side, as things come back, there's pressures on the less well-funded self-storages out there to put themselves on the market and maybe accept a more reasonable price, because they aren't generating, as interest rates went up, they aren't generating the same type of cash flow that they once were out of their self-storage. So they might perceive a little bit, well, they do perceive a little bit less value in their storage over time. And now they're putting their hands up and saying, hey, I'm ready to sell at a better price. So another reason that we might see some better returns on in the end is just buying well.
Yeah. So Danny, I'm sorry. I'll let you go where
Oh,
you
good.
want to go next, but just keep in mind, we got about 10 more minutes and then we're going to flip into Q&A. So I'm getting excited.
Let me just say,
And in that 10 minutes, I really do want to make sure we hunker in on what you have in the pipeline, because I think that was some really interesting data.
yeah, for sure. So, I mean, one thing I'll just speak to is, speaking about proprietary pipeline, we have about a $300 million pipeline of assets that we're looking at right now. It's always revolving as new storages come up and things go off market and on market, but it's about $300 million right now. We're seeing at this point about a 7% discrepancy between the bid and ask. So at the height of the pandemic, we saw about a 25 to 30% discrepancy between the bid and ask. People wanted basically more than people could spend on self-storage and generate returns, but those asks have come down now. We have our own proprietary system that has all 3,500 storages in Canada in it. We know the owners, we know the land, we know the local rents, we know how they're doing with the local rents. We have a sense of occupancies, all these things in our own proprietary system. Of those 3,500 storages, we know there's about 750 that we want or that we could deal with. And some owners have said to us, like, I'm not selling. That's fine. You sort of take them off the board and just do a slow drip of communication, but they're all within our system. And they all know that we're people who buy in their markets. Like, there's not every, there's more institutional capital coming into Canada right now than really there has ever been for self-storage. We probably have 4 or 5 institutional investors in storage, and most of them are looking for the, downtown Vancouver, Toronto, Calgary, Montreal, driving up sort of competitive pricing there. But we're the ones in the market going into Edmonton and saying, listen, if you got a good self-storage, we're willing to buy it. And people know that. And they know that we're able to close. We've closed on over 57 deals. So it's quite an exciting time for us. And as we raise capital, we're able to take advantage of that. Our deals are 70% off market. They're, like I said about mom and pops, there's 2 different operators out there. Well, there's probably like a bunch of different, but let's call it 2 extremes of mom and pops. One that, like, there are some that are so dialed in, like us, and they're running their 4 storages locally, and they're so dialed in. And when they go to sell, they've sort of maxed out every revenue piece they can max out and taken every expense. They built the best value they can. And when they go to sell, they get a realtor, and the realtor's driving max price and, like getting to 5 different, offers or 6 different offers. And we don't buy those. Like, we just don't buy those. That's not our business. Our business is to find the person who's been running their storage. They've been running it well, but not optimally. They have a good reputation in their local market, and they know that we'll close. They know that we'll do a good deal for them, and we have references of people who've done deals. So that's the type of deal we like to do, and those are off market. And then we also have a pipeline of assets that we have the right of first offer on. So that's about $130 million. They're internal development assets or other assets that we bought that if they go to sell, then this fund has the first right. And that actually provides quite a bit of stability over time, knowing that there is a pipeline as we acquire capital. And then we have a full trustee and board and a process where we'll vet those assets and make sure they're coming in at the right price and be able to deliver the returns to the fund. Everything's internal at MakeSpace. For MakeSpace, we do our own marketing, we do our own operations, we do our own, whenever there's a little development, like as an example in Winnipeg, where we just opened up 170 new parking spots. We do our own work there in terms of the development. We have a call center, full integration, technology. I like to say and I'll, maybe. Well, I'll go through the assets a little bit in a minute, but the one thing I'll say is that one of the things that I think has driven our success is we look at every aspect of our business and we think, how can we do better at that? How can we do better at operations? How can I do better at finance? How can I do better? How can I get better debt? How can we get better technology that drives results for our investors? How can we get better technology that enhances things for our storage clients? How can we do have a better acquisition team, create a better pipeline? That's our business. And I think that's one of the critical pieces to our success is everyone who's in every part of the business is driving out that way and really understanding it. So
Thanks, Danny.
Um,
Yeah, I'm just
Go ahead.
out of sake of time, wondering, can we get into, and obviously you've got lots of data here. There's a case study that you had on a
Sure.
slide, and I'm just wondering if you can talk about that case study.
Totally. I mean, there's a reason we picked it for the slide because it's a great case study. But it's Prince George. It's one of the markets that we bought in early. We bought 2 self-storages and a piece of land with that we had built 10,000 square feet on and a portable fleet. And we bought it for $14.35 million. Over the course of the next 4 years, we were able to build another 25,000 square feet of storage to meet the demand. During the pandemic, the city actually closed down. So like you couldn't get a development permit or a building permit. But what we did was we took 100 shipping containers and put them on site. And we're able to fill those up. So drive value that way. Bought another piece of land right next door to our storage and took our rental fleet from leased land and put it on our own land. And that drove a better financing value. So we were able to take more debt that we were able to reinvest in other storages. We were able to increase our portable fleet, appreciate rates in the 2 bigger self-storages. And between all of that and, probably about $2 million more in equity. So a total of 16.4, it's now valued at over $33 million. And again, that's what we try to do in every market. Now, every market is not going to be a Prince George specifically, but what do we do in that market? We look at the demands of that market in particular, and we try to meet those demands with the best service and best quality that we can in order to drive value for the clients and drive value for the investors. It's not super complicated. What do they say? It's simple, but not easy. Yeah.
Well, thanks, Danny.
Yeah.
I'm wondering, just if you're listening to the call live here, on the bottom of your screen, there's a place where there's a Q&A section. If you click on that Q&A, you can type in questions. But as we get into that Q&A conversation, Danny, I'm just wondering maybe if you want to just kind of wrap up with a couple of other comments before we dive into the questions, and really kind of maybe answer the question of, in a clear, concise way, why form MakeSpace? I mean, I think you've been driving the point this whole time, but I like if you're kind of giving an elevator pitch, why should I invest with you guys?
Yeah, that's great. I mean, we're leaders in the market. We very well focused on providing value for clients and investors. And I just think there's a long runway with solid tailwinds to the industry in general. And I think like I look at my management team, and I think it's just a great place to um, to trust to put your money. Like it's just it's very solid. It's not yeah. I'll stop there. And like even looking at this page, Ian, like you see these markets, and yeah, there's a lot of markets on here. But like think about Canada and how many markets there are in Canada. Like how hard would it be to put 6 more markets on this page? And does it really make a dent in all of Canada? It doesn't. So what do we have to do? We have to just continue with our process. We rinse and repeat. We've done it before, and we'll continue to do it. And we've never seen this type of institutional capital coming into Canada self-storage. Well, that tells you a little bit about where the smart money is going in terms of institutional capital. And it, I just don't see the value of storage as going down anytime soon. So
awesome. I'm going to go through this. We've already got a bunch of questions,
yeah.
And so I'm going to just kind of plow through the questions, and then we'll dive through. I'm wondering if you can talk to us about alignment. So Danny, you can even take off the deck so we can see you nice and big. Wondering if we can talk to investor alignment. I think one of the things that's kind of attractive about your structure is you have what's called a high watermark built into the fund. And then there's a profit split, meaning that really the forum make space management team needs to see growth before it really is kind of profitable for you guys. So it's kind of an investor focused or investor first kind of driven model. And then I'm also wanting to know, or wondering if you can articulate how much in terms of management team do they own of the fund from a percentage standpoint. So in terms of senior brass, percentage wise, how much do they own of the fund?
Sure.
So if you could just kind of give you us a picture of that.
Yeah, so without any outside investors, just the founders of Forum and MakeSpace and our ownership group, we have about $41 million invested in this fund. So
percentage wise,
fully aligned with investors, it's probably about 38% of the fund.
And for the record, I don't know any other asset manager that's got more skin in the game. Percentage wise, just wanted to highlight that.
Well, one of our biggest investors, who's my brother, who's did very well in his previous life and has been a big supporter for us over time. He's a big investor in this fund, and he was probably the biggest impetus to turning it into an evergreen fund. He's like, why am I getting out of self-storage? Like, I don't want an exit here. I want to keep going. And, we all sort of felt the same way. And Forum, after a year of due diligence, felt the same way about these assets, that they have a long runway of solid growth. And that's, we 100% put our money where our mouth is.
Thank you. Just talk to me about alignment. How does the high watermark work?
Yeah. So we have to hit very simply put, I guess, if we hit a place where we would start participating over 8%, where we start participating. So let's say we hit 10%, we hit a NAV, and then next year we fall back and we're not as profitable. And then next year we come back and hit 10%, but we hit below that high watermark. Well, we don't participate yet. We got to get above that high watermark. We got to get back above. So its real value has to be driven to the investor for us to be able to participate in any of back end participation.
And in the series that's available today, what is that high watermark on an annualized basis?
That's a great question, Ian, and I don't know what it is.
I believe it's 8.
Sorry, 8% on a percentage basis. Yes. Yeah.
And then it goes, and then there's a split. What's the split after that?
It's 80-20.
Thank you.
Yeah. So 80 in favor of the investor.
Yeah. So you've got to hit 8% growth before Forum. So if you're striking below 8%, essentially there's no profit share to management.
That's right.
And that's perpetual. That's a permanent high watermark. So if we do have a really rough market for a year or two, you guys have to recover that differential.
And then get 8%.
Yeah. Thank you. Okay. So talk to me about the capital stack. So how much in this fund alone?
Yeah.
What's the total AUM?
We're about 225 now.
And what's of the 225? How much is debt?
About 120.
So percentage wise, loan to value ratio,
Yeah,
what's it
you're
kicking
about,
at?
I think 55% right now.
Yeah, and your targeted return in the offering memorandum, you're kicking around, you have a targeted south of 60%, correct?
Yeah, so like as these assets grow, you can't refinance on the monthly basis. Like, like the bank gives you debt and you're sort of holding that debt for 3 years until you grow the asset enough that you can refinance at a higher level. So there's a bunch of assets. We've actually gone through two great portfolio refinancings, which has really streamlined the business. We used to do it one at a time, the storages, we'd get senior debt. Now through Bank of Montreal as well as RBC, we have two portfolio debts, which is again just streamlined the operations and allowed us to grow and also have liquidity. But yeah, so they'll lend up to about 65% of current, but then we're growing the assets over time, so it becomes 60%, 55. I think we've been as low as 40%. So
Yeah, again, I think it's also healthy just to recognize, the overall target is to keep it, south of 60 LTV, but currently you're about 55,
Yeah.
which is great. Thank you, Danny.
Yeah.
Moving on, wondering, and I think you've articulated this, but a question came in. What is the long-term vision? So if you think about, in the next 5 to 10 years, where do you see, you've used this word rinse and repeat. I'm
Yeah.
wondering if you can just kind of crystallize that for our listeners.
So we look for storages that are in underserved markets that have a little bit of extra land, so that we can continue to drive value into the storages on an ongoing basis. I would say the runway, like I said, Pender, we bought in 2004. We're still growing the value of that. Maybe not every asset has 20 years of value growth, but I would say on average, our assets are, 10, 12 years of value growth before they turn into just a cash contributor to the fund. So that's the type of assets we look for. We think we can find those on a high enough basis to drive our returns in the 10 to 15%, on an ongoing basis. And I would say there's a little bit of like, as you've probably seen in other businesses, Ian, like there's an accelerator. Like we do have a better team now than we did 6 years ago. We are better capitalized than we were 6 years ago. So that might lead to some portfolio purchases or like with something that might accelerate things faster. But we'll match the capital that comes in. So, yeah.
Well, it's, the great analogy on that was like even with Forum MakeSpace, their partnership, your financial reporting is exceptional now. Not that it was bad before,
Yeah.
but now your financial reporting is, I would say, at the top echelon side of things in terms of being able to see, as much transparency as that we're looking for. So
Appreciate it.
I like this question, and I'm going to change it around. The question is this: if you're interested, what's the minimum, and what accounts are we, or what kind of accounts does it fit into? And I think the add-on that I'd like to add to that question is from a tax perspective. How is if we're using non-registered dollars, how is that treated from a tax perspective?
Yeah, so starting at a minimum, I think we're at like $5,000. So very affordable for lots of people. And that's meant to fit within TFSAs. And to that point, we're available for TFSAs, RESPs, RSPs, so registered accounts access. And as you mentioned, if you're not in a registered account and you're using sort of a cash account, the tax treatment is a return of capital, and anticipate that being return of capital ongoingly. I would be surprised if that changed at all. So any yield would be, excuse me, return of capital, and then in the end, should you exit, it's a capital gain.
Yeah, and for somebody who's less familiar with taxes, certainly that's healthy just to recognize that that's the most efficient way to collect a yield is return of capital from an overall tax efficiency standpoint. You talked about that yield. That yield, remind us again, if someone was investing today, what's the yield?
Yeah, it's 4.5 cents. So I think it works it out to about 4.3%. Um, we match the yield to real cash going out. That's our strategy. We're not paying any cash that isn't coming up from the system and from the operations. So, should interest rates drop down and there's more cash in the system, the yield may go up. And, honestly, should the interest rates go up and there's less cash in the system, we may adjust it down. Our goal is to distribute the cash that's available.
Awesome. I thought this question is an interesting one. It asks, how involved is Forum in the day-to-day operations? And, I have an answer for that, but I'll let you answer that one.
Yeah.
How involved is Forum?
I would say Forum is very interested, and they have on the acquisition side where they have some very solid self-storage. They've actually ramped up their self-storage ability to try to support us on the acquisition side, which has been really nice. Brought in some real heavyweights from other parts of or other investment groups on self-storage. And on the reporting side, they were very instrumental in helping us develop our reporting. And then on the governance side, we have regular board meetings, and so they're attuned. But on the operations side, MakeSpace is the one who's handling the operations, and sort of understands how to drive the business to the operations and whatnot.
Yeah, and the other piece on it is it's truly like the way you're structured now is like Forum is MakeSpace, MakeSpace is Forum. Like it truly is like you have, maybe some legacy aspects of the team that you've developed, but you really have blended into a singular fund that you truly are not Forum and MakeSpace. You are Forum MakeSpace. Is that a fair statement?
It is on the self-storage side. I'll just put the caveat that whereas MakeSpace's whole focus is self-storage, Forum does have other aspects of their business that they also
Got it.
operate. Yeah.
Got it. Listen, Danny, what I think I want to end with is just a crystallization of what a conversation that we had. Somebody could Google on Ardill Group a money match, and you can go on YouTube and you can see a conversation that we had back a number of years ago. And I think that was 2020 or 2021. I forget when we had the conversation.
Yeah.
It was a few years back.
Yeah.
And you said to me, Ian, we're doing something boring here. We're just we know the business, we know what we're doing, and we're just kind of making sure we're putting the Lego blocks together. I forget exactly how you phrased it, but
something like that.
And I just want to say thank you. Thank you for doing what you're doing, and delivering on essentially exactly what you said you were going to deliver on. And you've been very, very consistent, very even keeled. You know what? Your personality on the call here is kind of pretty even keeled. And that's pretty much been the conversation we've had every single time.
Yeah.
You're a pretty even keeled guy. And I can understand why your personality, you get attracted to self-storage. I don't know if that's a fair statement.
Well, I'll say that I've been talking about self-storage to investors for 6 years now. The story hasn't changed that much, so I should be somewhat practiced at it by now. And the market changes, so there's a little bit of dynamic to the most recent market, but our story is the same. We're not boiling the ocean. We're picking up storages. We're operating them the best that we can in order to drive results. Like, it's the same thing, man. We want good, happy clients on the self-storage side, and we want good, happy investors on the investor side. And in life, there's like skill, hard work, and luck. And I think storage has also been a very good industry for us. So there's a little luck in there, but I feel like we put in the work and the effort as well.
Well, I'm thrilled to be a personal investor in MakeSpace, and I'm looking forward to continuing my relationship with you. On behalf of the Ardill Group team and all of the live listeners on our coffee chat today, thank you. Just a couple of housekeeping items. Anna will be sending out an email to everyone who's on this call, a $10 Tim's card. And again, it's just a symbol of our thanks. It's sponsored by MakeSpace. So thank you, Danny, for the sponsorship.
For sure.
And helping us make the coffee happen for everybody. And then in terms of, next time we actually have another date coming up, and we'll send you a follow-up email with our good friends at New Look, and we're going to be talking about what they're doing over at New Look. So I hope you join us in November for that. But otherwise, know that our door is always open. I hope that you found today informative and enjoyable, and I look forward to chatting with you in the days and weeks ahead. All the best. Cheers. Thanks again, Danny.
Thanks again. Thanks, everyone.